technology, the challenges of banking in the new era, etc., in various fora, I thought this could be a different kind of a theme which I would try to address. So, issues around risk, compliance, and internal audit, collectively known as assurance functions, is a theme which I thought I would focus on today, since it helps to identify and manage risks for sustainable growth for the financial entities. From a regulatory and supervisory perspective as well, Reserve Bank attaches utmost importance to the assurance function, and therefore to ensure that there is alignment between our perspective and also to communicate our expectations on this area, I think a continuing dialogue on this issue is extremely important. Before we delve into the intricacies of assurance functions, let me reflect briefly on the transformative progress and growth of the Indian financial landscape. In the recent years, we have witnessed remarkable advancements promoted or propelled by digitalization and technological innovations. We are seeing evolving consumer demands and changing needs of a fast-growing economy, and also that have challenged the status quo. These dynamics are reshaping in the way in which financial services are delivered and consumed. They disrupt traditional paradigms and necessitate agile responses from the financial industry. The scenario for financial entities thus far looks quite exciting in terms of opportunities, but is likely to be challenging in terms of the emerging risks. In order to sustain this transformation and an enduring commitment to safeguarding financial stability, fostering growth, and ensuring consumer protection should remain the prime motive for all of us here. The Reserve Bank, in its multifaceted role, plays a pivotal role in nurturing an ecosystem where innovation thrives, risks are contained, and consumers are empowered. From formulating monetary policy to regulating and supervising financial institutions, our mandate encompasses a wide array of responsibilities aimed at promoting the integrity and resilience of the financial sector. One of the hallmarks of an effective regulatory approach is being ahead of the curve. That is, by building in an ability to foresee potential risks which are emerging in the system and pragmatically addressing them. The idea is that the regulations that are framed are proportional, forward-looking, and responsive. In doing so, Reserve Bank as a regulator has always been conscious of the fact that the degree of regulation of a financial entity should be commensurate with the perception of risks posed by the entity to the system, as well as the scale of its operations. The scale-based regulatory framework for the non-bank financial companies and the revised tiered regulatory framework for the urban cooperative bank sector had this premise at its core. Additionally, the regulatory approach has been guided by a combination of activity-based and entity-based regulations to ensure the effectiveness while minimizing the unintended consequences. We have tried to leverage on the strength of both these approaches to achieve a more comprehensive and flexible regulatory framework. We find this hybrid approach particularly valuable in an ever-evolving financial sector, where innovation and new business models constantly emerge. The flexibility inherent in the hybrid approach has enabled us to adapt swiftly to the changes in the sector without sacrificing the overarching systemic risk management inherent in the entity-based regulations. The financial ecosystem has to be seen as a reflection of the past changes and policy choices. These are continuously tested for their ability to respond to emerging challenges. How the system evolves going forward will critically depend on how the various constituents, including the regulatory framework, adapt to the changing business environment. In the current milieu, our role as regulators demands that we support the entities in their quest for growth while being mindful of the risks. Keeping this as a context, let me share a few thoughts on two key issues and emerging challenges, and also reflect a bit on the role of assurance function in handling these issues. Later on, I will also touch upon the issue of combined assurance framework to bolster the conventional three lines of defense model. The first issue that I would like to discuss is the issue of third-party dependence and outsourcing arrangements in regulated entities. Because last Friday bears note, I think it essentially reflects the kind of risks which I am talking about. Third-party dependencies and digital outsourcing has become integral to the operations of the financial service entities, and with the consequent to the rapidly evolving technology. Regulated entities are increasingly relying on third-party agencies and outsourcing the digital operations to enhance efficiency, to reduce costs, and improve customer experience. However, while the third-party dependencies give several benefits, they also pose certain risks and challenges. One of the primary concerns is the selection of the outsourcing agency involved, or in case of digital lending operations, the lending service providers. Regulated entities need to assess the reliability, security, and regulatory compliance of their third parties to ensure that they meet the required standards. For example, while lending guidelines mandate that the regulated entities should ensure that the lending service providers engaged by them have suitable grievance redressal mechanisms on their website or apps, a recent study undertaken by us has found that not all of these lending service providers or apps have the kind of mechanism which we thought they would be having. Poorly managed third-party relationships can expose the regulated entities to not only customer dissatisfaction and reputational damage, but can also invite regulatory and supervisory actions. Cybersecurity is another area where regulated entities need to assess the preparedness of third-party service providers to protect their digital assets and customer information. With the increasing frequency and sophistication of cyber